Today's Wednesday, July 10th, and this is an end-of-day review on a position I took earlier this afternoon involving Snap Inc., ticker symbol SNAP. And as of today's close, the stock ended the session at $16.84. And in overall trading, the stock price was up 9 cents per share. So this is the chart layout at the daily time frame. Each of these candlesticks represents a day's worth of trading. The red vertical dash lines are system-generated markers for expiration Friday for monthly option contracts. The most recent expiration was on June 21st. The upcoming expiration is July 19th, which is next Friday, and the one beyond that is on August 16th. So from a broad look back, based on, I believe, a 2-year review, I've marked up two reasonable support and resistance levels. Upper resistance is at $17.06, and the lower support level is $10.66. And just looking left, this stock has been very volatile since the end of last year. As you can see, that price rocketed up from a low of around $8.50 all the way to almost $18 within 2.5 months. And we can see that price consolidated, was unable to go any higher before it was rejected. And what a major rejection it was, because the stock price generated a gap down, meaning on this day, on February 6th, the stock price closed at $17.45. And in the following trading session, it opened much lower than where it closed at $12.03. So this is approximately a $4.30 move to the downside during the overnight or pre-market session. And here, when price fell, it was consolidation at $10.66, where price essentially just went sideways. And then we have another gap up occurring on April 25th, and then opening much higher on April 26th. So this gap was about $2.15. And again, since gapping up, price is having a difficult time breaking above this upper resistance level. And I'm speculating that over the next few weeks, it's possible that price is going to get rejected again, and price is going to start gradually fading to the downside, possibly filling these two gaps. So what I did was I took a short position, anticipating a pullback. Now, not only was there these two gaps that needs to get filled, but this could potentially be the start of a double top formation. And what I'm referring to is that here we have this first move. This could be considered the first top, and then here is the second top. And ultimately, a double top is a bearish signal. So the next leg would be to the downside. And what I'm referring to is that if I switch over to the education tab, here's a full description of what a double top pattern is. But the gist of it is that, being clearly reversal patterns, double tops appear in the uptrend and reverse it to the downside. And here's a simple diagram of that. And here we have those upper horizontal resistance level, the lower horizontal support level, and those two peaks. So this is the second peak that I'm seeing right now. So this could potentially be a double top pattern, which would essentially coincide with filling this gap that was generated back in April. So this afternoon, I took a short position. This white line up here is just a visual markup regarding the specifics of the trade. So this is a trade involving option contracts. I didn't short the common shares. So I selected the August 23rd expiration date, and relative to the spot price of $16.84, I selected the $14.50 strike price. So it's essentially the halfway point, because if price continues dropping, then that would bode well for this specific position. And as a buyer of option contracts and bearish, I'm on the put side. And when I entered this trade, the stock was quoted at $17.16. So the trade is slightly going in my direction, but it's still early. So with all things said, switching over to the trade tab, So right here under the option chain section, there's a flag position pegged to the August 23rd expiration date. And down here at the bottom left are the details. It's exactly what I covered on the chart before. And I only picked up 3 contracts. Again, because this is really inside a uptrend, there is also that probability that that price could eventually break above this. So I thought I would just mitigate the risk with 3 contracts. These 3 contracts, or all these contracts that expires on August 23rd, will go worthless in 44 calendar days. My entry price is quoted at 72 cents. The option premium has increased as the stock price decreased, and it's still early. It's about 73 cents, 74 cents, and overall P&L is reflecting a positive balance of $4.50. So just to clarify on the valuation of these option contracts, each option contract represents 100 shares of the underlying security. That's what the 100 is pertaining to. So the actual value, it's not really 72 cents, but rather it's $72. Because if I take my option premium entry price of 72 cents, multiply that by 100 shares. So one option contract is $72. I picked up 3 contracts, not including commission. I'm risking $216 over the next 44 days for a potential pullback. And as I'm risking $216, ideally I'd look to capitalize on a 1 to 3 risk to reward. So if I multiply this by 3, then my initial take profit target is $648. However, if there's a strong sell-off, then of course I'll let the trade continue running higher. But that is the current status of this position and my general thesis for a bearish few weeks involving Snap for those 2 reasons, the gap fill and this double top formation. So what I'll do is I'll pause it here, let the trade work itself out, and when something more significant does occur, I'll update accordingly. So, quick update. Today is Friday, August 2nd, and the stock market will start trading in less than an hour from now. So, I thought I'd get a head start on the Snapchat update. So, as of yesterday's close, the stock ended the session at $12.81. So, clearly, the trade is going in my direction as the current closing price is much lower than my option strike price of $14.50. And just to quickly recap the position, I'm holding 3 of these contracts, and these contracts will expire worthless in 21 days on August 23rd. And my entry price has the option premium quoted at 72 cents or $72. And as of yesterday's close, the premium is now valued at $2.74 or $274.50 per option contract. And the P&L, the profit and loss side of the ledger, is reflecting a positive balance of a little over $600. So far, so good. And yesterday's pullback is attributed to 2 major catalysts. One was that the S&P 500 dropped a little over 100 points yesterday, pushing the markets down. And that helped the price of this option trade. The second catalyst is switching over to the market watch calendar. Snapchat reported earnings yesterday after the market closed. So right down here are the details, right? So as of August 1st, they reported their earnings after the market. So, and this was regarding their Q2 earnings. So this premium has not been factored in yet, the data for their Q2 earnings. However, looking at the chart at a lower time frame, so this is at the 7-day 10,000 tick level, which means each candlestick represents 10,000 trades. This red candlestick was the initial response by financial institutions regarding Snapchat's Q2 earnings, a complete sell-off. So much so that price fell below the $10 support level, hitting a low of $9.73. And heading into the stock market open, price is still below the support level. So when the stock market opens and the options market opens as well, then I'm going to keep an eye out on the option trade, because if price continues to stay below $10, switching back to the trade tab, the option premium could drop to maybe $4, maybe $5 per contract. And even though there's 21 days remaining, I am considering closing this trade out just to capitalize on the significant drop to the downside. Because again, right now, buyers could be stepping in, buying Snap shares at a discount, pushing price back to the upside. So while it's down here, I might as well just capitalize on that, because there is a broad history where Snap did find support at this $10.66 support and resistance level. So again, while it's down here, I might as well just capitalize on this potential move to the downside. So that's the current status on this trade. What I'll do is I'll pause it here and I'll take a look at the option chain heading into the stock market open, and then I'll start probably preparing to closing this position out. So for the purpose of time, I'll pause it and I'll be back in a few minutes. So real quick, so after the last recording, I've looked at the daily chart and switching back. So now this is the chart layout of Snapchat at the daily time frame. So this is as of yesterday's close. This is where it closed yesterday. And all that post-market trading isn't visible here. So the stock price is below this support level of $10.66. And because price fell to the point where, okay, so just to go back, this trade was entered when Snap was quoted at $17.16. So to capture a full $7 move to the downside, I think that's a win already. Also, the argument for shorting was also attributed to this gap fill. Now that price is clearly way below, filling this gap. And again, price it has been respecting this $10 support level. So I am more convinced to closing this trade out, even though there's 3 weeks remaining in the life of those option contracts. And even if it goes down to $9, that's only $1 more. I mean, I don't want to get too greedy, but I think capitalizing on this $7 move is enough. So what I'm going to do is when the market opens, I'm going to start prepping to closing out this position out. So more to follow. So the stock market has been trading for a little over a minute now, but I'm still waiting for the option chain to get updated because the premium is quoted at $2.36. So again, this is the chart layout for my option contract. So right by the ticker, this is involving Snap. Symbol is SNAP. And this is specific to the August 23rd expiration date with the $14.50 strike price. And this is on the put side. So this contract is specific to my option trade. And if I open up Active Trader, right here in the center section of this dashboard, top center, it says net position +3. So this is specific to my option trade. And right now it appears that if I was to sell this, the option premium still hasn't updated. It's the ask price is $545. The bid is $405. So, okay, now we're starting to see the option market come in. So if I was to sell this, I'd sell it at $405 right now. So let me see if I can place an order to see if I could sell this at $465. Right now the bid is $410, $415. So if I could sell this at $475, that's a net profit of $1,207. So let me see if I can place this order right here. Right now the bid is at $420. There. I sold it at 475 for that $1,200 take profit. So what I'll do is I'll go ahead and provide a breakdown of this position. Again, I don't mind if the trade continues dropping. I just want to. There's a lot of other securities I'm looking at, so that allows me to focus on that as well. So right back here it says net position is 0, so I am out of this trade. So for this is that $1,207. So I took a trade from, I believe, $270 to $1,200. So yeah, good trade. And until the next setup, I'll see you. So last check. So here it is. So this is now at the Snapchat's daily time frame. So we can see the stock is quoted at $10.02. So price is right here. So we can see that it was as low as $9.50, but then is now being bought up. So we can see there was another gap that was created. So similar to what happened here. So it's possible that eventually over the next few days, price is going to start working its way back to the upside and potentially break above this resistance level just to fill this gap now. I don't think I'll be participating on this potential gap fill because, again, this resistance level could be strong as well. And I don't want to take a bullish position and only have price roll over and go against me. So opening up trade tab, the position is flat and quantity 0. Even though there's still 30 weeks remaining, I'm okay with that. I just want to collect the profits. Again, this was a $7 move to the downside. So until the next trade setup, I'll see you.